Hi guys, welcome back to the channel. Today I'm going to talk about Nebius after their incredible Q2 earnings report and explain why I'm now even more bullish than I used to be. The core business of Nebius was incredible this quarter, reaching adjusted EBITDA profitability well before their expected timeline. But before talking about the specific numbers for the quarter, I want to focus on the big picture and make it clear that, as Nebius stated in its letter to shareholders, demand for AI infrastructure, which means compute, software, and services, will only get stronger as use cases multiply. Demand for AI compute is skyrocketing. Frontier AI labs are building and will continue to build more and more large language models. Thousands of AI native startups are launching new applications, and big enterprises are integrating AI into their core workflows. I want to reiterate that AI compute demand isn't just going to stay high for the next year or two. It's going to remain at extremely high growth level for the next decade and beyond. Nebius is aiming to hit 1 gigawatt of capacity by 2026, but the real story is much bigger than that. Nebius doesn't just have the opportunity to see its business grow 3 to 4 times over the next year. Over the next decade, this company could become one of the giants of the AI compute market. What makes Nebius an obvious buy is that, as Elon Musk said just a few months ago, we are heading toward a moment where there will be a bottleneck in GPUs, and soon supply won't be able to meet all the demand. So, even if the software, which right now is the main reason why Nebius is the preferred choice for many new AI native startups, doesn't turn out to be a mode for Nebius, I'm certain that they will still be able to sell all their capacity in the market. Nebius just feels like such an obvious play to me. All that Nebius has to do is continue executing, ramp up their data center production, and reach the highest capacity possible. Seeing the growth they've delivered over the past year, I have no doubt that they will be able to execute their plan. Talking numbers, Q2 was absolutely outstanding. Revenue grew 625% year over year and 106% quarter over quarter, with the platform reaching near peak utilization. This clearly shows that demand is huge and Nebius won't have any trouble selling all their capacity. Like I have already said, Nebius achieved positive adjusted EBITDA in their core business sooner than expected. But the most striking figure is that Nebius raised its annual recurring revenue forecast for the end of 2025 from the range of $750 million to $1 billion to the range of $900 million to $1.1 billion. By the end of 2025, they expect their connected power to reach 220 megawatts. They are also in advanced talks for 2 major new greenfield sites in the US, each worth thousands of megawatts. Overall, Nebius is on track to secure more than 1 gigawatt of power by the end of 2026. Another very important point is that Nebius secured contracts with big enterprises in Q2. They had major global tech names like Cloudflare and Shopify. As Nebius brings on larger clusters, they will be able to onboard new, bigger clients who need to buy greater and greater capacity. This will allow Nebius to expand and diversify their customer base, which is currently very focused on AI native companies, while also significantly boosting their numbers. In fact, during the Q2 call, Arkady, the CEO, emphasized that their mid-term revenue estimates don't even include potential contracts with hyperscalers. If those deals come through, it will cause a massive jump in Nebius' projected revenue. From what Arkady said, there is a lot of confidence that such a contract is on the horizon. Once again, it's important to highlight what sets Nebius apart from other neo-cloud companies, a top-tier team that has worked together for decades. Nebius may be called a startup on paper, but in reality it's what remains of Yandex, often referred to as the Google of Russia. This kind of experience isn't easily replicated. On top of that, Nebius has a strong balance sheet, with about $1.7 billion in cash at the end of Q2. They have repeatedly said that if needed, they are ready to raise funds from partners like Nvidia and Excel, as well as leverage their non-core businesses. Speaking of which, 2 key non-core businesses are Toloka and Aviride. Toloka is a data collection platform used to train AI models. Not all data is useful, and Toloka excels at selecting the right data to train models effectively. In Q2, Toloka attracted investment from Business Expedition and Shopify's CTO. Nebius owns more than half but has given up control. To get a sense of its potential value, a competitor, Scale AI, was valued at $30 billion in June after Meta bought 49% for $14 billion. Ride is Nebius' autonomous driving division. Here too, Nebius is seeking strong partners to co-develop the business and seat control. Ride will start testing a self-driving fleet with Uber in Texas by the end of this year, and its technology is on par with Waymo, which is currently valued at around $50 billion. So it's clear Nebius will have multiple options to continue funding the growth of its core business, and honestly, there are many other possibilities as well. So, to wrap up, Nebius Q2 was a big success. They continue to execute at a fast pace, demand is massive, and growth is set to continue for the next decade and beyond. Nebius' balance sheet is strong, which will support ongoing expansion. In light of all of these, I can't help but be bullish. I have to admit, I plan to keep growing my position, and I will continue buying. That's a wrap for today. Thanks for listening, and I'll see you next time.